Investment buying. The markets recorded gains on the weekend after a week-long meltdown on global cues. The BSE Sensex snapped a losing trend and gained 181 points on Friday, the 4th of January 2019 to close at 35,695 level, while the NSE Nifty stepped up 55 points and ended the week at 10,725. As a follow-up to the last month's meeting held in Argentina on the so-called trade war, in which the US and China agreed on a ceasefire for 90 days, the two countries' officials are meeting again, this time in Beijing from 7th and 8th of January for specific talks on tariffs. Both countries are adopting a middle path on the issue, raising hopes for an amicable solution. Apple Corporation announced during the week that its China sales will decline, even as the People's Bank of China has decided to cut a percentage point cut in statutory liquidity ratios. This is the first time that the country is reducing reserves ratio after March 2016. The Chinese central bank is implementing this 1 percentage point, 100 basis points, cut in two phases. First 50 points cut from the 15th of January on the second 50-point reduction from the 25th of January, thus bringing additional $117 billion available to the industries. It is also expected that China will announce stimulus measures to boost the economy. The US Fed clarified that it paused interest rate hikes for now. These three factors helped the markets to stabilize in the green zone in the current week. The GST Council is going to limit the GST on houses under construction to 5% at its 10th of January meeting. The threshold limit that attracts GST may also get increased to 75 lakh rupees turnover. This measure will lead to lower inflation. Earlier, the manufacturer exporters alone enjoy the incentives. Now merchant exporters also will get these benefits. They too get cheap loans at 5% interest rate. This decision helps to increase overall exports. Specifically, all companies in the textiles sector can earn additional profits. The parliament sessions will be over by this weekend. The vote on account budget will be tabled on the 1st of February ahead of the general elections. Nikkei Services Index slowed in December to 53.2 from the earlier month's 53.7 points. In the Kiri Industries case, the Singapore Court's Case Management Committee is meeting during this week. The generally lackluster counter of Mohota Industries has been witnessing heavy trading. The share price may slightly go up. With the merger taking place among Vijaya Bank, Dena Bank, Bank of Baroda, as Vijaya Bank and Dena Bank are merging into Bank of Baroda, the shareholders of Dena Bank will get 110 shares in Bank of Baroda for every 1,000 shares they held. Similarly, the shareholders of Vijaya Bank will receive 402 shares in Bank of Baroda for every 1,000 shares they held. These swap ratios are not positive in the short term to the shareholders of Dena Bank and Vijaya Bank. But it is advantageous to get shares in the broad-based Bank of Baroda. It may give some solace to them. The come date for the buyback offer of Tata Investment Corporation lies on the 9th of January, 2019. The company will buy a total of 45 lakh shares of 10 rupees each at a price of 1,000 rupees per share. This share may get a small appreciation before the come date, and it will give decent long-term gains after the record date. All the chemical companies that use oil as key raw material are going to declare impressive third-quarter results. Aji Petrochemicals will be in the front line among them. This company earned 80 rupees and 70 paise CR in the first half of 2018-19 versus 72 rupees and 70 paise CR in the H1 FY18. The shares of Galaxy Bearings, Andhra Petro, Oricon Enterprises, Kna Axles, Manjul Shova, Tilbros Auto, Deepak Nitrate, GNFC and South India Bank are good for long-term at the current market prices. The Q3 results of Tata Elxsi, Bajaj Corp, IndusInd Bank, Bandhan Bank, Goa Carbon, Infosys, Delta Corp to come out this week, and one has to keep a watch on these companies. Up to the vote on account budget and until the end of the Q3 season, we can expect a sideways trend in the market.